it comes to trading the markets, would you say following the crowd is a good thing or a bad thing?
Well, it depends at the time. Sometimes following the crowd is a good thing. So when the masses are on board a move, it helps the market move in a certain direction. But at certain times, it is absolutely the wrong thing to be following the crowd. And there are sentiment measures where we can see how many traders out there are either long or short in any particular market at any one particular time. I'll give you a good example. I'll give you a couple of examples. If, let's say it's the stock markets, if the stock markets are roaring up to new highs, what generally tends to happen is the public at large start to get bullish on the markets because they see that the market's at new highs. The press and the media start to talk about the fact the FTSE's at new highs or whatever it might be. And so that enables more and more people to think, oh, I really should be investing into funds. And so as the latecomers get into the market, and that might push it up just that little bit further, but because they're so late, once everybody's on board, who's left to buy? So once you get to an extreme like that, there's no one left to buy. So you're better off being on the opposite side of the market. A great example of this is euro dollar from 2015, early March 2015. Everybody was bearish on the euro dollar. Euro dollar was around about 104, 105 at the time I think it was February, March of 2015. And I was being interviewed actually on another financial TV program. And the interviewer was saying, come on, the euro dollar is going to go to parity. It's going to go to parity, Charlie. What do you think? And I'm sitting there thinking, well, actually, I don't really believe that. We're at such a big negative extreme in sentiment. Everybody was calling for the euro dollar to go to parity. And when I'm seeing big extremes in sentiment, I'm thinking, well, who's left to sell? What happened was the euro was at 104, 105. In the space of the next 2 months, it went up to 117. So it went against what everybody or a lot of people were saying. So yes, when there's extremes in market sentiment and the crowd are all clustered on one side of the market, you're better off doing something else.
How would you trade against the masses?
Okay, I think I've already hinted at it. There are measures for seeing where traders are positioned. So you can look at market sentiment measures. There's plenty of websites that give you that information to show you how many investors or traders are long or short in any one particular market at any one time. So back at that, in that example I gave from the euro dollar, there was something like 70% of investors and traders were short the euro dollar at that time. Now that's quite an extreme. So that's how I would gauge, okay, this is a bit extreme. Then I still have to look for technical reasons why to go and do the opposite. So that's when the charts become involved and you're looking for then technical reasons to say, okay, is there something happening in the price action here which is actually suggesting a reversal is imminent? And so that's what I'll couple sentiment in line with technical measures.